Hello everyone, good morning. Thank you for joining this press conference for the launch of AMRO's ASEAN+3 Regional Economic Outlook 2023, or AREO 2023. My name is John Kramer from AMRO's communications team, and I will be your moderator this morning. Here with me today are AMRO's chief economist, Dr. Hoe Ee Khor, and senior economist Anthony Tan. In a moment, Dr. Khor will give his presentation on AMRO's latest findings, and after that, we will take your questions. So that means for media in the room, please raise your hand if you have a question, and we can pass you the microphone. For those attending virtually, please submit your questions in the WebEx Q&A box located at the bottom right-hand corner of your screen. Also, please note that the press conference will be recorded. So without further ado, I would now pass over to Dr. Khor to take us through the findings of AREO 2023. Dr. Khor.
Thank you, John. Good morning to everyone. Thank you all for joining us this morning, those who join us virtually as well as those who are here in the room. So this presentation is based on Chapter 1 of our flagship report, which will be released after the launch. So I will take you through the presentation in the next several minutes and basically give you the key messages from our findings. Next, yeah. So the lifting of the COVID-19 containment measures released pent-up demand, which led to a surge in private consumption. So as you can see from the chart on the left, the recovery in 2022 was driven mainly by domestic demand, especially private consumption, which is the red bar. The chart on the right shows the strong pickup in retail sales and capital goods imports. So these two charts, the next one, please, shows the exports of goods and services. The left-hand side chart shows the exports, the red line, have slowed down very sharply since the middle of the year due to weakening global demand. And we expect the slowdown to continue into this year. Although there are some signs of bottoming up, so we expect that, especially with the reopening of China, that there'll be some support for external demand and exports. On the right-hand side, you see that tourist arrivals, which is the red line, has spiked up very sharply. So export of services, especially tourism, has picked up very strongly. And we expect that to continue into this year because of the reopening of China. I think the tourist outbound travel has been a bit slow in picking up, but I think it's going to strengthen during the year. This chart shows the spike up in inflation. Inflation was relatively low until 2022, as you can see from the chart. It spiked up sharply in 2022 with the outbreak of the Russian-Ukraine conflict. Although it has peaked and moderated somewhat, it's still at a very high level. And the red bar on the left-hand side is the inflation rate for February. And you can see that it's still very high and well above the inflation target, which is represented by the black dot in those bars. The lines on the left-hand side, those are the average inflation rate for the last 5 years. So inflation is still very elevated, and central banks are still trying to contain and bring it back down. China's reopening will provide a timely boost to the region's growth. The strong rebound will help to support external demand for both goods and services. The green bar you see on the left-hand side chart shows the build-up of financial savings as a result of the lockdown and the reduction in household spending. So we expect domestic demand to rebound strongly this year, what they call revenge spending, which should provide a boost for regional exports. The recovery in China's outbound travel should give a boost to regional tourism. The heat map on the right-hand side is for manufacturing, and you can see from the chart that the color was turning from green to orange and yellow towards the end of last year, but now it's beginning to turn yellow and green again. And we expect that to continue into the year. But of course, that depends very much on what happens in the US and Europe as well. This chart shows that the US and the ECB, the Federal Reserve and ECB, have been hiking rates very aggressively to contain inflation. The red line is for the Federal Reserve and the green line for the ECB. On the right side, you see that a sharp increase in the interest rates in the US is basically spiked up in May when the Fed realized that it was behind the curve in terms of the inflation. So since then, they've been aggressively hiking rates, and it's gone up very sharply. These three charts shows the development of financial markets in the region. The leftmost chart shows the stock market, and you can see that stock market are basically reverted back to where they were pre-pandemic, except for the Hong Kong, which is the red line at the bottom. They were hit very badly by the COVID outbreak last year, and because of that, the stock market crashed. But now it's picked up again, and we expect it to go back up again. The middle bar chart, the middle chart shows the 10-year bond yield. You can see the bond yield have actually gone above the pre-pandemic level for countries in the region. So, as you know, before until basically last year, interest rates were pretty low in the region because of the shutdown. But since then, the Fed has been raising rate, and similarly, central banks in the region have also raised the policy rates, and generally interest rates have risen. So we see that the 10-year bond yield has gone up between 50 to 200 basis points above where they were before. This is because of they're trying to anchor inflationary pressure. On the right-hand side, we see the exchange rate. Last year, most of the exchange rate basically fell very sharply because of the strong US dollar. But then they started to revert back in November, and since then, they've basically, many of them reverted back to pre-pandemic level, although more recently, the exchange rate had begun to weaken again, partly because there's a perception that the Fed is going to have to tighten further. Okay, this table shows our forecast of growth for the region. The forecast is very data dependent. I must give the caveat. So it depends on developments during the year. But this is our baseline forecast. As you can see from the first two columns, growth for ASEAN+3 region, the very top line, came down sharply from 6.3% to 3.2% in 2022. But that's mainly because of China. China, as you know, was struggling with COVID-19 outbreak during the year. But we expect, on the other hand, for ASEAN countries, growth rebounded very strongly from 3.1% to 5.6%. And that's because in 2021, they were hit by the Delta outbreak. And 2022 was a very strong recovery, driven mostly by domestic demand. So the countries, for instance, had some of the highest growth rate in the world: Malaysia, Vietnam, Philippines. This year, we expect growth to moderate, at least for the ASEAN countries, to 4.9%, partly because of the strong headwinds that we see in the US and Europe. Global export demand is likely to be much weaker. On the other hand, China is expected to recover very strongly by 5.5%. So for the region as a whole, we expect growth to increase to 4.6%. So that's a pretty robust growth for the region, and so the region is going to be the main driver of growth for the global economy. Next year, we expect growth to moderate somewhat to 4.5%. So it's basically about the same, very strong, robust growth for next year as well. But as I said, this is very much data dependent. We have to see what happens. We have been hit by a few shocks since we released our forecast. For instance, the Silicon Valley Bank, the crash there, and more recently, the cut in the OPEC output. This is a table on the inflation rates for the region. So you can see again from the first two columns, the inflation spiked up very sharply in 2022 from 2.1%, it went up to 6.5%, mostly driven by the spike in the ASEAN region. The inflation in the +3 countries is more moderate. But in ASEAN countries, inflation went up from 2.5% to almost 8% last year. and it varies across from country to country. This year, we expect inflation to moderate to 5.7% for ASEAN countries, and for the whole region, to moderate from 6.5% to 4.7%. So they are still relatively elevated, and central banks are still very concerned because most of them are still above the inflation target, as I showed earlier. So they're going to have to keep monetary policy relatively tight. Of course, it varies from country to country, the situation, until inflation is on a downtrend and back to pre-COVID or pre-2022 level. So our forecast, as I said, is can be derailed if there was new shocks, and these are some of the risks that we see facing the region. There are 5 risks that we identified. The first one, which is the spike in energy prices, that's the bubble in the middle row. So if that happens, it can lead to higher inflation, tighter monetary policy, and a deeper slowdown in the US and Europe. The second risk that we identify is the emergence of a more virulent variant of COVID-19 virus. We see that as a small risk, but nevertheless, it can happen. Then in the middle, we see a slower than expected recovery in China. As I mentioned earlier, we are expecting quite a strong recovery this year for China, 5.5%. But again, that's subject to what happens elsewhere. Maybe if the US and Europe were to slow down more sharply, it will be a drag on growth for the external demand, and the growth could be weaker. Or the real estate sector, has not fully recovered and may weaken further. So there are all these, factors that can affect the growth outturn. The third bubble that we identify is a slower, sharper slowdown in the US. I think the data for the US has been a bit mixed. On the one hand, the labor market is very strong, and people are expecting sort of a soft landing for the US now. But more recently, I think the data has turned more negative. So now, again, analysts are quite divided that maybe the slowdown will be much stronger. So again, here we are very much data dependent, and we have to see what happened to the US and Europe. But it turns out that in the case of Europe, because of the warm weather, the economy is much stronger than what was expected earlier. And finally, of course, there's this heightened geopolitical tension, and that, if it escalates further, could lead to what they call geopolitical fragmentation of the global economy, which is a more medium to long-term issues, but it would have an impact on the region. I now turn to the banking crisis in US and Europe. You can see from the chart on the left-hand side that volatility spiked up very sharply, when the Silicon Valley Bank crashed, and then it spiked up further when Signature Bank collapsed again, and more recently the Credit Suisse Bank. So this was totally unexpected. I think we had expected that the hike in interest rate is going to affect the region or emerging markets, but it turns out that it's hitting the financial institution in the US and Europe. In any case, the exposure of the banks in the region are quite small to Silicon Valley Bank, a bit more to Credit Suisse, but they are quite small and manageable. But there could be other indirect effects on the tech sector. The tech sector could be affected because of the Silicon Valley Bank. And there's a bit of a risk aversion at the moment. And in the case of the region, Singapore and Hong Kong are likely to be affected because of the merger between UBS and Credit Suisse. They have announced that they're going to cut employment by about 30%. And because of the large presence of both banks in the region, I think the economy will be affected as well, although much less so because I think Asia is supposed to be the profit center for both banks. And finally, it may affect the Federal Reserve policy. Initially, because of the Silicon Valley Bank, people expected the Fed to ease off in terms of the tightening. But they went ahead and increased policy rate by 25%. But going forward, I think that's going to be very dependent on what happens to inflation. If inflation would come off, then I think the Fed will ease off. But if inflation remains high and sticky, then I think the Fed may begin tightening again. So we are concerned about the risk on the banking system in the region, and we have been doing a lot of stress testing, partly because of the forbearance policy during the COVID period. And what you see on the chart on the left is that the NPL ratios, that's the red bar on the left-hand side, is relatively small. Okay, so what we have done is done some reverse stress testing to see how much the NPL would have to rise before the CAR ratio is breached, the capital adequacy ratio. And as you can see, you have to increase by about 15 percentage point, or more in order for the CAR ratio to be breached. So the banks are relatively safe in terms of their capital buffer. On the right-hand side, you see the liquidity coverage ratio, and they're all above 100%. Some of them, almost double the minimum requirement. So turning to policy, the chart on the left-hand side shows that central bank in the region have been hiking the rates, raising the rates in order to contain inflationary pressure. And at the same time, on the right side, you see that they have also been consolidating their fiscal stance because they had this extraordinary fiscal stimulus during the last 2 years, during the COVID period. And now that the economy has recovered, most of them are withdrawing the fiscal stimulus, and also revenue is recovering in many of these countries. So as a result, the fiscal deficit is shrinking across the region. Again, it varies from country to country, but generally they are all consolidating to rebuild the fiscal buffers that's been reduced. As I mentioned, the economies in the region have been consolidating, and that shows up very nicely in this heat map on the left-hand side. Basically, you can see the color changing from green to orange or gray. Green means the fiscal policy is expansionary, and orange means they're consolidating, tightening the policy, and neutral means they are basically unchanged. So there's a shift across most countries in the region to consolidation. So even though they're consolidating, our view is that it is appropriate for the government to provide targeted fiscal support to some sectors in the economy which may be lagging behind, or the vulnerable groups in the economy. Turning to monetary policy, basically our view is that as long as inflation remains relatively high, the central bank should maintain a tightening bias. It's only when they see inflation coming off that they begin to hold or ease off. I think just recently we saw Vietnam cutting its discount rate by 1 percentage point. And to us, that's appropriate because the data that came out just a few days ago on Vietnam shows that the economy is much weaker in the first quarter than we expected. But Vietnam is very export dependent, and because of that and the decline in export, it turns out that the growth is much weaker. And inflation has already turned around. So the central bank has decided to cut the policy rate, and we think that's appropriate. On the prudential policy side, I think most central banks and regulators have already withdrawn the forbearance policy and the credit support to the private sector. But again, here, they need to be cautious. There are some sectors that are still suffering, and we think that targeted credit support for those sectors will be appropriate in order to support them. But of course, you don't want to overdo it because then you end up with a lot of zombie companies. So close monitoring of the credit support to make sure that the companies that are receiving the credit support are viable, is important. So let me now close with reiterate some of our key messages. Our view is that the growth in the ASEAN+3 region is robust. It's anchored by strong domestic demand, and goods export will continue to weaken because of the slowdown in the US and Europe. But services export are expected to strengthen with the reopening of the economy, especially with the rebound in tourism. And China's reopening has provided a very timely boost for the region's growth, providing support for both export on the services as well as the goods side. The region is on track to improve in 2023, and we expect it to grow by 4.5% this year and next year. And inflation is still elevated at 4.5%, but it should moderate to 3% next year. So let me stop here. Happy to take questions.
Thank you very much, Dr. Khor. Okay, everyone, so now we can turn to your questions. As mentioned, for media in the room, you can raise your hand and we'll get a microphone to you if you have a question. And for all of you joining online, please put your questions into the Q&A box in WebEx and we'll take it from there. So I believe there's a question from the room already. If we could get a microphone over there, please. Thank you.
Hello, good morning. I'm from China Central Television. Thank you very much for giving me this chance. And the AMRO report forecasts the Chinese economy to grow by 5.5% in 2023, slightly higher than the IMF's forecast of the 5.2% and China's own economic growth target of 5%. So what led to such a forecast for Chinese economy, and what are the engines of China's economic growth in 2023? And how will China's growth influence other economies in the ASEAN+3 region? Thank you.
Well, thank you for the question. Yes, indeed, I think we are more optimistic than the official forecast. But actually, we are very much in line with private sector consensus forecast for China. And I think the main reason is because everybody was very surprised by the sharp, and fast, quick rebound of the economy from the lifting of the zero COVID policy in December. At that time, everybody expected the recovery to be a bit bumpy, that there would be going to be outbreaks, and it'll take a few months before infection subside and the economy recover. But as it turns out, by late Jan and February, I think the indicators show that the economy was rebounding very rapidly, and most analysts at that time started to revise their forecast upwards. So we have also done the same, and so our forecast now is 5.5% for the economy. So as I said, it's very much data dependent. If there is another outbreak later in the year, it could be a drag on growth, or if the US economy were to slow down sharply, it could be a drag on growth. But at the moment, our baseline is 5.5%. On the question of what are the main drivers of growth, it's mostly driven by domestic demand, spending. Because the external side is going to be weak, and I think the data shows that export has been quite relatively weak. But there's been pent-up demand because of, and I think in one of my charts it shows the increase in savings. So that's going to lead, we believe, in a much stronger private spending this year, and that will help to support the economy. And as for the impact on the rest of the region, China is the biggest trading partner for almost every country in the region. So it's going to, the strong demand will help to support the external demand for the rest of the economies in the region. It's been a bit slow in terms of showing up in the numbers. So export numbers are still weakening. But there are signs that it's beginning to level off. And we think going forward, export is going to show up in terms of the export to China is going to be much stronger. So that would help to support demand for the ASEAN countries. And we already saw that in the case of Vietnam, the weakening in export and the growth in the first quarter. So we hope that going forward, the recovery of China will lead to stronger export from the ASEAN countries to China, and that would help to support growth as well.
Thank you, Dr. Khor. Thank you very much. Okay, I'm going to move to the next question, which has just come in, and now we're turning to...
He wants to ask a question.
Sorry, my apologies. Yes, could you pass the microphone, please? Thank you.
Thank you so much. I'm from Xinhua News Agency. I have a question about the Chinese consumer market. China has 1.4 billion people population, and as this year, as you mentioned that the reopening of the China, how you see this huge markets for the region and the global? Do you think because this year very soon the third China International Consumer Production Expo will hold in China? Do you think? Could you give some idea about this Chinese market, Chinese consumer market for the region and the global? Thank you.
Yeah, as I said earlier, we expect the growth in China to be driven by consumer spending or private investment as well. Although the real estate sector investment is weak, but the rest of the investment in manufacturing and also public investment is very strong. But mostly it's private consumption will be very strong in China because of the revenge spending. So that's going to show up in terms of imports, not so much in terms of direct imports, although we can also see that, but mostly because China's trade with the region is mostly in intermediate goods. But the intermediate goods then feed into the production process, and it shows up as final consumer products. And then and this is where the final consumption of the Chinese population is very important because it helps to support the intermediate goods imports coming from the region. I don't. What is the other part of the question?
I think that was it, just about the consumer.
Did I answer your question?
Does that answer your question?
Is there another part to it?
It's okay. Yeah. Thank you very much.
The consumer market, 1.4 billion.
Oh, yeah.
I mean,
it's a very large. Yeah.
Okay. Actually, we're going to stick with China because another question has come in from the China Business News. What factors will China's trade growth in 2023 depend on?
What factors?
What factors will China's trade growth in 2023 depend
on? The external side is going to be weak, but how weak it's going to be will depend very much on how much the US and Europe economy weakens. So that's one big market for China's exports, but the ASEAN region will be relatively strong. And we have seen that actually ASEAN was one of the biggest importers for China last year. So trade, overall, I think trade in China is going to be much weaker than before. So this is why we think that there's a downside risk to the growth forecast that we have, because if the external demand is much weaker than we expected, there's going to be a drag on growth, and of course they'll show up in the growth number as well. But because China is such a big market, and that goes back to the 1.4 billion, it's a huge economy, and much of the demand is driven by domestic spending rather than the export side. So that's going to be the main driver of growth for the Chinese economy rather than on the export side. Yeah.
Okay. Thank you very much, Dr. Khor. Maybe I could turn to Anthony now for the next question. It's from the Bangkok Post. The question is, what are the upside opportunities that would boost regional exports in 2023? So over to you, Anthony.
Yeah, thanks, John, for the question. Well, we do see a couple of upside opportunities for regional exports this year. Number one, certainly as mentioned by Dr. Khor, services exports, particularly travel and transportation, is poised to bounce back strongly. Indeed, as you can see on the charts, the travel exports, they are doing very well. So we do expect that momentum to continue, given that there's a full reopening of borders, right? And if you look at the latest tourism statistics, if you look at ASEAN economies, we can see that the monthly tourist arrivals have, they have recovered to more than 60% of the pre-pandemic levels. And this is very encouraging, and we do expect this trend to continue. The second trend that we are seeing, and this is an emerging trend, is the fact that we are seeing a pretty robust growth in exports of ICT services because of the increased usage of digital technology. And if you look at 2020, 2021 on average compared to 2019, the growth is actually pretty good. It's around 20%. So that really underscores the opportunities from these new areas of growth. And of course, second is the China reopening story. You can see on the chart that this excess savings or deposits is a sizable 20 trillion RMB in 2022 alone. So therefore, we do expect some of this pent-up consumption demand would benefit the rest of the region. As Dr. Khor mentioned, even though the imports from the regions are mostly intermediate, they are channeled into domestic economy for processing for their final consumption. And third, of course, this is very much dependent on what's happening in the US and Europe. Yes, we do expect growth to moderate, but if you look at the latest data, at least Q4, the numbers are not too bad. So there is a silver lining, for global trade, helping to provide some support for manufactured exports in the region. So those are the three upside opportunities that I see for the region's export for this year. Thank you so much. Over to you, John.
Thank you, Anthony. We're going to go to a question from Cambodia now. It's from the Khmer Times, so maybe I can come back to you on this again, Anthony. The question is, according to the outlook, which are the sectors that are likely to perform better for Cambodia, and which are the industries expected to struggle in 2023, considering the inflationary trend in the EU and interest rate hikes in several countries? So maybe Anthony could go back to you on that.
Yes, thanks a lot. On Cambodia, now let me start with the overall economic outlook. So for this year, we are expecting Cambodia to grow by 5.9%, so slightly faster pace from the estimated growth rate of 5% last year. Now, if you look at the sectoral drivers of growth, again, the services sector is projected to recover strongly, benefiting from the expected return of Chinese tourists. As we know, if you look at the 2019 data, this is pre-pandemic, the Chinese tourists, they are the largest source of inbound foreign tourists to Cambodia, accounting for about 1/3 share. And that means that there's a substantial amount of tourist receipts accruing to the economy, and this means more jobs creation, so on and so forth. So if you look at the latest monthly statistics, we do note that the total tourist arrivals in Cambodia already recovered to 50% of the pre-pandemic levels, and therefore on track to even surpass pre-pandemic levels soon. Now, in terms of the sectors that will be facing some headwinds, I must say that because of this subdued external demand, we do expect the manufacturing sector in Cambodia, mainly garments, to face some headwinds this year. But there is some bright spots. We know that the economy is doing a lot of diversification of exports. So there are some segments in the manufacturing sector, particularly electrical and vehicle parts, optical cables, solar panels. These are like helping to support the growth in the manufacturing sector at a time where there are government exports which are mostly tailored to US and Europe. They are going to face headwinds this year. So that we will see as a reason that will mitigate the weaker export performance this year in the government sector. So let me stop here. Thank you.
Thank you, Anthony. Might have to come back to you again. We've now got a question from the Hanoi Times. What is your view on Vietnam's economic prospects in 2023 and beyond, especially during rising global uncertainties and Vietnam's dependence on trade?
Okay, thanks, John. On Vietnam, as Dr. Khor mentioned, our baseline projections are very much data dependent. We mentioned that caveat right from the very beginning. Now, if you look at Vietnam in retrospect, right, the economy enjoyed solid growth last year. They benefited from strong domestic consumption and very robust exports performance. Indeed, if you look at the growth rate of 8% last year, now that's one of the fastest pace in decades. So for this year, we are expecting growth to moderate to around 6.8%, and next year 7.1%. Look at the last row there. Now, we do know that there are headwinds to growth. In fact, as Dr. Khor mentioned, the Q1 growth performance this year was pretty weak, and we do feel that given the headwinds to growth, this baseline number is, of course, on the optimistic side. But of course, this is our baseline, right? There are risks that we need to watch. Now, notwithstanding, there are a couple of reasons to be optimistic. First, as you look at the previous charts, right from the very beginning, we see that domestic consumption in the region is actually doing very well. In fact, in Vietnam, the Vietnamese consumers are increasingly become more affluent. So that really underscores the notion that private consumption will be a key driver of growth, rather than the export sector, given that the export is, of course, right now is very much trade dependent, right, and very much linked to the global trade cycle. The second positive notion is the fact that the services sector has become more vibrant, since the economic reopening. You see that segments like retail, transportation, these are really becoming an important engine of growth for Vietnam. And of course, number three is the still supportive public sector spending, and that will help to provide some support to overall growth for this year and into the next. So let me stop there. Thank you so much.
Thank you very much, Anthony. We're going to move back now to the more regional outlook, and perhaps I can pass this question to Dr. Khor. The question is, relative to January, the growth outlook for ASEAN+3 in 2023 has improved. Apart from the reopening of China, what are the other key factors supporting this improved outlook?
Thank you, John. Okay, so the reopening of China is obviously an important boost for the economy. But as I mentioned, besides that China, there's also the strong headwind that we were expecting before. We were expecting the US and Europe basically to weaken very sharply this year. But as it turns out, it looks like they may have a soft landing, so-called. And if that happens, then of course it helps to support exports in the region. The other factors would be, for instance, commodity prices have already turned around. They have peaked and come off. So because of that, inflation also is beginning to decline. So that's a good thing, because it means that central bank will not have to tighten as much, and that would mean that there's more monetary support for growth. The third is that tourism has become much more strongly than we expected. I think most of the countries had a certain target for tourism, and the tourist arrival have exceeded the expectation for most of the countries. And they have also been able to attract a lot of investment inflows, at least on an approval basis, was very strong for several economies in the region, Indonesia, Malaysia, Thailand as well. This will eventually show up in terms of higher production. And finally, and this is related actually to reconfiguration of supply chain. There's a so-called diversification strategy among many of the companies to move their production from China to another country. And so many of the countries in the region are benefiting from that, ironically. But there's also investment in natural resources like nickel, and this is related to the opportunities that open up because of the so-called climate change issue. So some countries in the region like Indonesia and maybe Vietnam as well, which have nickel resources, will benefit from investment in those industries. So for a variety of reasons, we are quite optimistic, not just in the short run, but also in the medium term about the prospect for the region. Yeah.
Thank you very much, Dr. Khor. Actually, it's interesting you touched on supply chain, because a question just arrived from China Business News, which I think you covered quite a bit. And it is, what's your observation on the supply chain shifting in this region? Is this economic activity actively occurring? But I guess you've covered that on us. Yeah, thank you very much.
Yeah, I think because of COVID, there was a disruption to the supply chain, and countries become much more mindful of the vulnerability of relying solely on one or two countries for supply. Initially, it was medical supplies, but because of the tension between the US and China, it has broadened to also other products as well. So because of that, now I think most companies have a so-called resilience policy. They're shifting from efficiency to resilience, from just in time to just in case. And that's resulting in some reconfiguration of supply in the region. And that has, we think that the ASEAN in particular will stand to benefit from the diversification of supply, particularly if they are coming out from China. Most of them were likely to move to ASEAN countries. Even, I think the Chinese companies are also moving the production to ASEAN countries as well, partly because costs have risen in China, but also to diversify their own production and also to take advantage of the growing market in ASEAN countries. So for all these reasons, I think the supply chain will be reconfigured, but I think basically, the bulk of the global supply chain will remain intact, notwithstanding, the fact that for some products like semiconductors, there's an inshoring of production to some countries, but the bulk of the trade in goods and services will not be affected because of that.
Okay, thank you very much, Dr. Khor. I just want to check, so nobody from the room at the moment? Okay, then we'll go back to the questions online. I guess unsurprisingly, there's a question given what's happened with Silicon Valley Bank and Credit Suisse. There's a question here, should ASEAN+3 economies be concerned about the recent stresses in the Western banks? So maybe Dr. Khor can say something about that.
Well, I basically addressed that question to some extent during my presentation. When we look at the exposure of the banks to the Silicon Valley Bank or to, they are quite small. Exposure to Credit Suisse is much higher. But again, even though it's higher, it's quite small, quite limited. So there's our concern is much more in terms of whether the financial institution may be subject to the same kind of run on deposits and all that. And we've been doing a lot of stress testing, as I mentioned earlier also, on the bank balance sheets in terms of their capital adequacy ratio and their liquidity ratio. And on both counts, I think we find that they are pretty resilient or robust, the buffers. So yes, I think regulators should always be concerned about the potential shocks to the banking system, but I think the spillover from the banking crisis into the region is relatively limited.
Thank you very much, Dr. Khor. We're going to turn back to Vietnam. Question again for the Hanoi Times. Perhaps I can pass this to Anthony. It says, given the fierce competition for FDI in the region, what are your recommendations for Vietnam to attract high-quality foreign capital?
Thanks, John. Yes, Vietnam has certainly benefited from the economy's integration into the global value chains. We are seeing increasing number of many of the world's leading MNCs establishing a presence in the country. We know some of the pluses, like close proximity to regional markets, relatively competitive and skilled workers, right? These are all on the plus side. But Vietnam still has a long way to catch up with its regional peers when it comes to, say, the level of labor force productivity and one of the things that the authorities can consider doing is perhaps try to capitalize on its young labor force and try to boost productivity. And one area they can do that is, number one, by placing greater emphasis on vocational and technical education to reskill the workers. And another important consideration is that this pretty often overlooked is the need to develop and strengthen supportive local industries, what we call as the backward linkages, which is really necessary so that we can have like an entire ecosystem that fosters this virtuous cycle of productivity enhancements and innovation spillovers that reinforces one another. Now, this will be important because as Vietnam moves to higher income levels, the economies needs to compete not just based on cost competitiveness, but based on things like strategic competitiveness. That means building productivity enhancements, innovation. So this will be the ones, or will be the considerations like foreign investors look at if they want to continue to attract high quality foreign capital into Vietnam. Let me stop there. Thank you.
Thank you, Anthony. Thank you very much. Okay, thank you to China Daily, who've sent in the next question. There's a couple of aspects to this, so maybe Dr. Khor, I'll pass this to you. How can ASEAN economies make better use of debt to empower their development when debt sustainability is facing challenges? What role can the Belt and Road Initiative play in facilitating this process? And how do you see the economic impact of BRI-related financing on ASEAN economies? So quite a lot to take in there for you.
Yeah, debt sustainability is an issue, especially for developing countries. But there's no reason to shy away from that as long as the loan is used for productive investment, because that will lead to higher growth, higher returns, and the returns from the debt can then be used to service from the investment can be used to service the debt. I think the risk comes from, if the investment were to fail or if it's used for consumption purposes. So that's where I think the risk is, and also the source of borrowing, whether it's from commercial sources like through the capital markets, or whether it's borrowed from multilateral agency, or bilateral agencies at concessional rate. So for most productive investment, debt is not really an issue because that's part of the financing of most projects anyway, a combination of equity and debt. The problem is for infrastructure investment, where the returns sometimes, where the project is not fully commercially viable in the short term, and the returns are not are realized over a longer period. There, the financing for those type of investment tends to be harder to come by, because if you raise money in the capital market, the hurdle rate is too high. And so most of the time, those investments has to be financed either from domestically by raising bonds or from the multilateral agencies, the World Bank, ADB. And this is where I think the BRI comes in. China has provided financing and investment for infrastructure projects. And the financing terms tend to be either concessional, or even if they are commercial, they are below what you can get in the capital markets. So as long as those infrastructure projects are managed well, there's no reason why a developing country should shy away from borrowing, because those infrastructure projects will crowd in private investment, raise the growth rate of the economy, the revenue, and the revenue can then be used to service the debt. So in principle, that should be pretty safe. But of course, in practice, some of these projects may fail. So as a result, then you have to deal with the debt problem. But that happens with any projects that you undertake. There's always risk involved. We did a study of the BRI projects in the region, and our finding was that more than 80% of the projects actually are productive and quite successful. But there's the other 20% that didn't work out as well. So those have to be managed, and the debt has to be resolved in one form or another.
Okay, thank you very much, Dr. Khor. Turning now to Malaysia, a question from the Star in Malaysia. What is your view on what would be the upside factors for Malaysia's growth? What would also be the headwinds? Maybe Anthony, would you like to have a go at that? So the question is, what is your view on what would be the upside factors for Malaysia's growth? What would also be the headwinds? So if you would both like to.
You want me to take it?
Yeah,
Go ahead.
I can. Thanks a lot. Okay, let me start with the outlook. Malaysia has done pretty well last year. In fact, together with Vietnam, Malaysia, was amongst one of the fastest growing economies in the region. Now, we do expect growth to moderate to 4.2% this year, coming from a high base. And there are a couple of considerations. Number one is that look at the growth drivers. Let me start with domestic demand. Yes, domestic demand will continue to drive growth because of this pent-up consumption story. In fact, if you look at the share of private consumption, is sizable. Now that will continue to drive growth or anchor growth, right? And that is crucial because external demand, as we know, is on the moderating path. But of course, there's a silver lining, as I mentioned earlier, because if you look at the growth numbers coming up from US and Europe, they are better than expected. And if you look at this year, the growth forecasts for these major advanced economies are still pretty positive. And in terms of the drivers of growth, apart from private consumption, we also see investment kicking in because of the restrictions, mobility restrictions due to the COVID-19 lockdowns. Some of the investment projects have been delayed. So we do see some resumption of these activities. And if you look at the presentation chart, you can see that even some of these monthly indicators of capital goods imports, they are actually on the rise, and Malaysia is one of the country. That I would say as the fundamental drivers of growth for Malaysia for this year.
Okay.
Would you like to add anything, Dr. Khor?
Yeah, no, I think Malaysia is a very, very lucky economy, highly diversified. They have not just manufacturing, natural resources as well. So they benefited from the terms of trade, for instance, last year, and they bounced back very, very rapidly. And if you look at the investment, FDI inflows, they managed to attract a lot of investment. So longer term, we are actually very, positive about the growth prospect. Of course, at the moment, because of the pandemic, they had the fiscal deficit is quite high, and I know the great agencies are looking very closely at Malaysia's, debt and fiscal situation. But they have a medium-term consolidation plan to bring the fiscal deficit down to 3.5% in 2025, I believe. And so far, I think they are, on track to achieve that. So we are not particularly concerned about the debt issue as well.
Sorry, if I may add, Dr. Khor, yeah. So the growth drivers will be largely private domestic demand because the consolidation taking place in the private sector, in the public sector. And as I mentioned earlier, I just want to give some numbers. If you look at the size of approved investment in 2021, it's pretty large. And as I said, because of the delayed due to the mobility restrictions of the lockdowns, some of these projects will be on stream, particularly in E&E and even in telecommunication like data centers. Thank you.
Okay, thank you very much both. The next question is it relates to China and Hong Kong. It's from the Business Times. It's mentioned in the report that China and Hong Kong are expected to lead the rebound. However, Hong Kong just recorded the largest drop in manpower in 4 decades. How do you think this will affect its recovery?
Yes, they will still lead the rebound. We expect, for China, mainland China, we know growth is going to be quite robust this year. And Hong Kong was hit very badly because of the COVID outbreak last year. They had negative growth. This year, we expect growth to bounce back to 4.5%, I believe, around there. Yeah. So so that's basically, and that doesn't require actually, independent of what the employment labor market situation. I think that affects the longer-term prospect for Hong Kong. The fact that the labor force is lower. Is it by how much? Is it?
So that was by
a bit
40.
decline.
Yeah.
Yeah.
Over 4 days.
So that's an issue for Hong Kong, because of the COVID and other problems. But the unemployment problem is actually across many countries. Many countries also suffered a drop in the labor force during the COVID period, basically because the foreign workers return back home, and it takes time for them to come back. But now they're reopening the economy, and foreign workers are coming back here in Singapore as well. And I expect a similar thing will happen in Hong Kong. To the extent that it's a very open economy, they can allow more foreign workers to come in. That would help to fill in the gap because of the decline in the labor force during the pandemic period and also last year. So I don't think that's going to be an issue for Hong Kong longer term because it's a small economy. Unlike in the case of China, because of a demographic shift, aging population, there's more structural.
Okay.
I think in the case of big continental economies. Yeah.
Okay, thank you very much, Dr. Khor. Question has just come in from the Philippines Star. So, question on the Philippines is: what will drive the growth for the Philippines, and what are the challenges? Oh, I'm sorry, was there a question in the room?
No.
Oh, okay, sorry. We were just noting the time, but I think we have time to take.
Last question.
Let's take this one. Let's help them out. So, so the question is: what will drive the growth for the Philippines, and what are the challenges?
Yeah, Philippine growth has been relatively strong in the last 2 years. They suffered the sharpest decline, I think, 9.5% in 2020, when COVID hit. But then they bounced back very strongly in the last 2 years. Last year was 7.6%, which was much stronger than most people expected. The Philippine economy is a service economy, unlike some of the other ASEAN economy, very much driven by the services sector, tourism, the BPO, the business back office processing. And they also export labor, and they get a lot of remittances from abroad. So the main driver of the economy is basically remittances, which comes from the export of labor to other countries, as well as the growth in the services industry, especially now with IT. I think that's going to benefit from the digitalization of the economy. And so the call center and the business processing industry continued to grow during the COVID period, and that's why the growth of the Philippine economy is so strong. So those are the key drivers, and now I think Philippines is beginning to, they have a lot of potential in tourism. Tourism is an area which benefits enormously from infrastructure. They have a lot of beautiful beaches and attractions, but they need to build the infrastructure and the facility to attract the tourists. And I think they are doing that. They have this build program to build up the infrastructure for the economy. And I think indications that in the last few years, they have ramped up the infrastructure, and they will continue to do that. So.
Thank you very much, Dr. Khor. So unfortunately, we've come to the end of the press conference. We've run out of time. I'd like to thank Dr. Khor and also to Anthony Tan for giving their insights today. Just want to remind you that on our website, on the AMRO website, you can download the report, the press release, and indeed the presentation just given by Dr. Khor earlier. We're going to take a 30-minute break here, but we will be returning for what promises to be a very interesting panel discussion on the second chapter of AREO, which is on climate mitigation. The chapter is ASEAN+3 on the road to net zero, which is the title of our panel discussion. So we do hope you can rejoin us for that in 30 minutes. Thank you very much.